Amin Arif, the IFC country director, my senior colleagues, the deputy governors, assistant governors, and other members of the central bank CEOs, our former senior colleague and advisor to the president, Dr. Rajapatrana, ladies and gentlemen. Thank you very much for inviting me to be here at the start of an important journey. Financial intermediation is the lifeblood of economic activity. So access to financial services is a key determinant of the life chances of our people. This makes the National Financial Inclusion Strategy a key platform for achieving inclusive and regionally balanced growth and development. This in turn reinforces the importance of the development process that we are about to launch today. But before I get into the main substance of this morning's launch, I would like to take a few minutes. You know, when you're in my position and you get a captive audience, it's very difficult to resist the temptation to talk a little bit about the economic prospects and challenges of the country. But the elephant in the room is the political situation in the country. And I am not aware of any country that has been able to make significant progress without political stability. So the restoration of political stability is of paramount importance. It is particularly important at this juncture because I think, and I hope I'm not being overly optimistic, I think we were beginning to see some progress in a positive direction, both in terms of strengthening the macroeconomic fundamentals of the country, as well as putting in place a framework that would give us sustained growth. Why do I say that? If you look at the key macro indicators which reflect stability in an economy, if you look at inflation, we are down to 4.5% as far as headline inflation is concerned. We had a blip in the last quarter of 2017, but that was entirely due to supply disruptions. Those have been handled. And core inflation right through has been within our target 4 to 6%, and now headline inflation is back there, and we think that it will remain there for the course of this year. If you look at the external stability of the economy, the reserves of the country were built up from $6 billion, the gross reserves, at the end of 2016 to 7.97, almost 8 billion at the end of last year. So, and not only was the volume of reserves built up, but the quality of reserves were also improved because we were able to reduce short-term swaps from 2.5 to 1.5 billion. So there was an improvement in the quantity and quality of our reserves. So these broad indicators of macroeconomic stability were moving in the right direction. As far as the growth framework of the country is concerned, the overall growth rate is disappointing. I think the Census and Statistics Department will put out a number which is not as high as we would like it to be. But the underlying fundamentals in terms of the growth framework seem to be improving. That is reflected in the fact that we had a record year for exports last year from a very low base. You know, it's nothing to write home about. I must be very frank about that. Our exports are still far, far too low, but it was a record year. The same applies to FDI. The same applies to flows into the Colombo Stock Exchange. So these are still, the levels, overall levels are still too low, but we are moving in the right direction. So both in terms of macroeconomic fundamentals and in terms of framework, which provides us the prospect of sustained growth, we were going in the right direction. And I should mention here too that we should guard against the danger of going for short-term expedient solutions to push up the growth rate. The growth rate is not high enough. And when you see the number, you will see that it should be higher than it is now. But the important thing is to keep working on a growth framework that gives you sustained growth, which is driven by exports. Because with a market of 20 million people, external demand has to play a major role in terms of providing sustained growth in the medium to long term. So are we getting that right? Are we moving in the right direction? We seem to be. So on both the macro side and in terms of the growth framework, things were coming together. So the important thing now is to keep on track. We must not deviate from what we have embarked upon. What has been done should have been done quicker, that's for sure. Things have gone too slowly, but I don't think this is the time to deviate from the path that we have embarked upon. Now, if I can go back to financial inclusion, Sri Lanka's efforts in increasing financial inclusion dates back to the early 20th century. The early efforts in increasing financial inclusion were epitomized by the cooperative movement, where loans were provided to the farming community through cooperative societies. Thereafter, various state-initiated efforts to increase financial inclusion were put in place. Different governments have initiated, albeit as isolated efforts, programs such as the formation of the Rural and Regional Development Banks, the National Development Trust Fund, and special government programs such as Janasavya, Divinaguma, and Samurdhi. In addition, the central bank has also taken various measures to increase financial inclusion in the country. It has been promoting physical access to banking services through encouraging the opening of new branches in rural areas and simplified procedures relating to lending operations. On behalf of the government, it has also mandated targeted lending to the microfinance sector, to SMEs, to agriculture, youth, and women. Further, the central bank has been facilitating and implementing refinance, interest subsidy, and credit guarantee schemes targeting the MSME sector. Financial inclusion does not entail only providing affordable access to financial products and services, but connotes the need to increase financial literacy and financial awareness to enable users to utilize financial services effectively. The central bank has been conducting awareness and capacity building programs covering financial literacy and financial management, entrepreneurship development, and skills development for the needy segments of the population, with a focus on youth and grassroots level entrepreneurs. Quite a lot of this has been done through our regional offices around the country. Furthermore, the central bank is focused upon improving payments and settlement systems, encouraging the use of electronic and mobile payment systems, which would assist in increasing financial inclusion. All these efforts have had a positive impact in terms of financial inclusion in the country. Today, Sri Lanka has a wide range of financial service providers offering high levels of physical access to branches, and currently, bank branch density of Sri Lanka is 18.6 branches per 100,000 adults, while bank branches are spread relatively equally, widely throughout the country. Moreover, 83% of the adults have access at a financial institution, access to accounts at a financial institution. Another encouraging fact is that the same percentage, that is 83% of adult women, also have an account at a formal financial institution, unlike in many comparator countries where women have far less access to financial institutions. However, we cannot rest on our laurels. The task of enhancing financial inclusion is indeed challenging. While considerable advances have been made, there exist several bottlenecks in achieving greater financial inclusion. We must strive to provide more accessible, effective, efficient, and affordable financial services which are responsive to the needs of the population. This is a prerequisite for broad-based and inclusive growth which benefits every citizen of our country. The customers of financial institutions must be able to access financial services without any fear of being harassed or getting into a debt trap. I believe that Sri Lanka has a lot of untapped potential in the use of electronic and mobile systems for banking transactions. Access to credit can also be improved. In order to achieve this, a more dynamic approach which entails a combined effort of all stakeholders, including state institutions, formal financial service providers, and other relevant professional bodies, supported by a cohesive policy framework, is required for this. The formulation of a national financial inclusion strategy has become essential. And this strategy will constitute a strategic tool that will coordinate and implement cross-cutting actions and reforms to increase financial inclusion. It will, without doubt, assist the authorities in the critical task of producing a well-thought-out approach for the country, including a robust monitoring and evaluation framework. Financial inclusion is essentially connected with the central bank's mandate of maintaining economic and financial stability. Therefore, the central bank is championing financial inclusion by convening relevant stakeholders to draft Sri Lanka's first national strategy for financial inclusion. The crucial role of the International Financial Corporation of the World Bank Group in providing technical as well as financial assistance through an extensive development process is greatly appreciated. This will enable us to draw on the World Bank Group's experience in developing national financial inclusion strategies across the world and assist us in distilling best practice which is suitable for our own country-specific circumstances. The Central Bank, in consultation with the IFC, has drafted a detailed work plan in formulating this strategy. It expects to implement the strategy by mid-2019. Through formulation and implementation of a national financial inclusion strategy, Sri Lanka is joining over 60 countries that have launched or are in the process of developing such strategies. For successful implementation of this process, high-level political commitment is required. Most of all, active participation and commitment of all stakeholders who have been identified and whose representatives are included in the steering committee and the working committees is essential. A consultative process will be followed, involving all relevant stakeholders from the outset. We need to work together with a clear understanding of our goals, strategies, responsibilities, and most importantly, the challenges we would encounter in formulating this strategy. I invite all of you to provide your wholehearted commitment and support in the successful formulation of Sri Lanka's national financial inclusion strategy. Thank you very much.